Hello, savvy taxpayers. Welcome to the world of lesser burdens and more savings. Today, we're exploring the enticing topic of paying fewer taxes in 2024. It's crucial to grasp tax regulations, not as a chore, but as a tool, a key to unlock potential savings. So buckle up as we dive into the ways you can reduce your tax payments in 2024. Scene script. First things first, let's decode the concept of tax deductions. Imagine you're at a dinner party, and you've been served a huge plate of food, way more than you could possibly eat. Now, wouldn't it be great if you could remove some of those extra helpings before you even start eating? That's exactly what tax deductions do for your taxable income. Tax deductions are essentially the financial equivalent of dieting. They are expenses that the government allows you to subtract from your total income before it determines how much you owe in taxes. So, they help slim down your taxable income, and consequently, your tax bill. Now let's imagine you earn $100,000 a year. If you have $20,000 in tax deductions, you won't be taxed on the full $100,000. Rather, your taxable income drops to $80,000. But here's where it gets interesting. Tax deductions don't reduce your tax bill dollar for dollar. Instead, they reduce your income that's subject to tax. So, if you fall in the 25% tax bracket, a $20,000 deduction could save you $5,000 on your tax bill. It's almost like having a discount coupon for your taxes. And who doesn't love a good discount, right? But remember, not all expenses qualify as tax deductions. Only those that the government deems deductible can be subtracted from your income. So, it's not a free-for-all buffet, but there's still plenty on the plate to help you save. And voila, you've just reduced your taxable income and thus your total tax payment. Now, let's explore some common tax deductions that you might have overlooked. First on the list is mortgage interest. If you're a homeowner with a mortgage, a portion of your monthly payment goes towards interest. The good news is, you can deduct this interest. That's right, Uncle Sam is essentially helping you pay your mortgage. Now, isn't that a pleasant thought? Next up, medical expenses. If you or your dependents have had significant health issues during the year, chances are you've racked up substantial medical bills. Anything from surgeries, dental treatments to prescription medications can be included. And you know what? You can deduct the portion of these costs that exceeds 7.5% of your adjusted gross income. So, those doctor visits might just be a silver lining at tax time. Thirdly, we have state and local taxes. You can choose to deduct either your state and local income taxes or sales taxes, not both. If you've made big purchases during the year or live in a state with no income tax, the sales tax deduction might be the way to go. And if you're in a high tax state, the income tax deduction could be your best bet. These deductions can significantly reduce your taxable income. For instance, if you're in the 25% tax bracket, a $1,000 deduction could save you $250 on your tax bill. That's a nice chunk of change, isn't it? It's also worth mentioning that these deductions are not automatic. You'll need to itemize to take advantage of them, which might involve a bit more paperwork. But hey, a little extra effort for a lower tax bill? Sounds like a pretty good trade-off. So, don't miss out on these deductions and start saving more. Scene script. Ready for some hidden gems? Let's uncover some lesser-known tax deductions. First off, let's talk about teacher expenses. If you're an educator and you've spent out-of-pocket money on classroom supplies, you might be eligible to deduct up to $250 from your taxable income. That's right, your dedication to your students' learning can lead to a tax break. The only condition is that you must be an educator who works at least 900 hours a school year. Next up, we have the student loan interest deduction. If you're a student or a parent of a student who's paying back student loans, you may be able to deduct the interest you've paid throughout the year. This deduction can be a maximum of $2,500, and it's an above-the-line deduction. That means you don't need to itemize to claim it. Lastly, let's delve into the home office deduction. If you're self-employed and you use a part of your home exclusively and regularly for your business, you can deduct expenses related to that space. This includes rent, mortgage interest, home insurance, utilities, and repairs. You can calculate these deductions using either the simplified method or the regular method. The simplified method is easier, as you just multiply your home office square footage by $5, up to a maximum of $1,500. The regular method is more complex, but it can yield a larger deduction if you have high home expenses. With these hidden gems, you can further cut down your tax payments. Remember, every bit of saving counts when it comes to building your financial future. So don't overlook these lesser-known tax deductions. They could be your ticket to keeping more of your hard-earned money in your pocket where it belongs. Scene script. Time to fast forward to the future and look at what 2024 has in store for us. As we approach the dawn of a new year, the world of tax regulations never sleeps. It's always evolving, adjusting, and adapting to the changing economic landscape. So, here's a sneak peek into the changes in tax regulations for 2024. First off, let's talk about the standard deduction. It's expected to increase slightly in 2024 to adjust for inflation. This means you could potentially subtract a larger amount from your income before calculating your tax, which could reduce your tax bill. Next up, tax brackets. Just like the standard deduction, tax brackets are also expected to be adjusted for inflation. This means the income thresholds for each tax bracket could increase, potentially keeping you in a lower tax bracket even if your income increases slightly. But it's not all rosy. There's also talk about an increase in the capital gains tax rate for high-income earners. This could affect you if you make a significant amount of money from selling assets like stocks or real estate. So if you're in this boat, it's a good idea to start planning for this potential increase. Lastly, there are also whispers about some changes to tax credits. The child tax credit, for instance, might see some alterations. The exact changes are still up in the air, but it's something to keep an eye on, especially if you have children. Now, these changes might sound a little overwhelming, but don't fret. The key is to stay informed, seek advice from tax professionals, and plan ahead. Remember, knowledge is power, and the more you know about these changes, the better prepared you'll be to navigate your way through the tax labyrinth. So stay updated and prepared to make the most of these changes. And that's a wrap on how to pay fewer taxes in 2024. It's been quite a journey, hasn't it? We've unraveled the complex web of tax savings, delved deep into the concept of tax deductions, and highlighted those common deductions that could save you a pretty penny. But we didn't stop at the familiar, did we? We ventured into the lesser-known territory of tax deductions, shining a light on those overlooked areas that could be your ticket to bigger tax savings. And let's not forget the changes in tax regulations for the upcoming year. As tax codes are not static, staying updated is crucial. As we've seen, understanding these changes can mean the difference between a hefty tax bill and a lighter one. So here's the deal. Tax savings are not about evading responsibilities. It's about understanding the system and using it to your advantage. It's about knowing where to look, what to claim, and how to navigate the ever-changing landscape of tax regulations. And most importantly, it's about keeping more of your hard-earned money in your pocket, where it belongs. In the end, remember this. Every dollar saved on taxes is a dollar earned. And who doesn't like earning more money? So take these insights, apply them, and see the difference it makes to your financial health. But we're not done yet. We've got more tax-saving strategies and wealth-building tips up our sleeves, and we're more than excited to share them with you. So what are you waiting for? Remember to subscribe to our channel for more tax-saving strategies and wealth-building videos. Here's to a prosperous 2024.